Alright, so recently I got a comment on one of my posts that said you need to step your game up. Those are rookie numbers. And of course it was Matthew McConaughey from Wolf of Wall Street at the lunch table, you know, banging his chest and shit. It was kind of funny. I laughed it off and said, yeah, no news, no risk this week. But here's the thing. This tells me one of three things about that person that commented on there. One, he just doesn't know how to trade. Two, he's new to trading and thinks that you have to size full size every trade that you do. Or three, just simply wasn't watching the markets this week. Because if they were, they would know that this week only had two news events, which was FOMC minutes, which really doesn't move the market at all, and there was unemployment claims, which is, you know, hit or miss. But this week, both of them didn't do shit. So this video is going to be about risk management and how to size properly. I'm not going to go into detail exactly like how much contracts or whatever, but just in general how you should be sizing according to the markets. Yeah, so if you're new, this is super important if you ever want to survive in this game. So make sure you pay attention. All right, so one thing you guys got to understand is that the market doesn't give the same opportunities every day. Like not every day is going to have the same probabilities. And if you're going into the trade risking the same amount every trade without knowing this, then you're gonna just set yourself up to blow accounts. So you gotta know that the market moves in cycles. You can have weeks or maybe even months of solid price action, and then you'll just get stretches of like trash price action where you don't even want to trade. And as your job as a trader, you need to be able to identify these conditions and size your risk accordingly. Now, let me tell you what happened this week for me. Before the week even started, I checked my Forex Factory calendar and I saw that there's literally no news this week except for FOMC minutes, which really doesn't move the market. It's just going over what the speech was or what, you know, what the past FOMC meeting was about. And unemployment claims, which is a hit or miss. Sometimes it does move, but this week it did not move at all. So even before I went into the week, I made sure I checked how, you know, the news events were. And just going off of the fact that there's no news events this week, I sized my risk way down. Because when there's no news, there's usually no volatility and no volume and nothing that is in the fundamentals that will actually help move the markets. Right, so this way I can size accordingly. Like I sized way less than I normally will, just because I don't want to be risking too much on low probability days when I know maybe next week there will be more news and I'll have higher chances of winning more with the higher probability day. And I know this is a cliche thing to say, but I believe it's true. As a trader, you have to preserve your capital. And the two things that I think will make you last in this game is preserving your capital and keeping your mental stable. And to preserve your capital, you have to have good risk management. And to keep your mental stable, you have to be able to risk your management correctly so that you're not going on tilt when you lose too much or when you lose on low probability days when you know you shouldn't have, and then you try to make it back and you just spiral out of control from that point, right? So when the setups are clean, when the markets are moving and it's showing you good price action, those are the days you want to size up. But if you blow your account trying to chase these trades and force trades and risking all crazy on low probability days, you won't even make it to see the good days. So that's why it's important to size according to how the market is showing its hand. And yeah, I know a lot of you guys are out there, you know, full size every time you trade, but that's just the fast track to blowing an account, to be honest. Like if you don't understand how the market moves and how to adjust your size as the market moves, then in the long run you're not gonna make it in this game. But I feel you. I know it sucks to, you know, maybe have like a big day and then having to size down and you only get like half of whatever you're normally making, and psychologically it could, you know, make you think you're not progressing, but in fact that's the opposite. You're actually training your discipline to be more disciplined on sizing and risk management. And I know because I've been there. I was the one full porting everything, maybe not full porting, but you know, going full size on low probability days, and then like I lose, and then I tell myself, oh, why did I do that? I know the markets are shit today, I shouldn't have gone in. And then like I'll take another trade and slowly just dig myself a bigger hole. But yeah, once I started to learn how to size according to the markets, I saw that I started losing less. And when I did win, I waited till the high probability days where my setup was like A++++. And I would just size heavy on those trades. And also too, I cut out the trades that were ultimately holding me back and kept me at break even. Because those little trades are the ones that like really set you back and you don't really notice, because you think, oh, maybe it's just a little, I'll just try like a little B setup or whatever, and then those B setups add up if you keep doing it. You know what I mean? So if you just cut those trades out, then those are the ones that really matter in the long run, that help you get profitable and stay profitable. Because if you keep doing those little trades, you're gonna gain a lot, and then those little trades will add up and keep bringing you back down. And I'm saying this off of experience, you know. And yeah, just trust me, it helps when you de-risk on those low probability days. A lot of people think that more trades equals more money, but in reality, more trades will ultimately hinder your progress, just because the odds of you failing a trade is more if you take more trades, obviously. But yeah, if you just hone your skills and be patient and only take A+ setups, it's hard to say, but if you only take A+ setups, your win rate will drastically increase because you're taking less setups and you're only taking the good ones. You know what I mean? So yeah, sometimes the best risk management is just taking no trades. No trade day is a win for me. You know what I mean? For you not to click the button is a win in itself. Even though you didn't make any money, you didn't lose anything. And it's strengthening your discipline by not having to take a trade every time you're on the market. And knowing not when to trade, if your model doesn't show up, or if it's like a C setup, you don't take those trades. You know what I mean? Like when you don't take those trades, it's reinforcing good habits. And the more you do that, the better you'll be as a trader. Another thing about risk management that gets looked over is that you don't have to go all in on the very first position. There's always a thing called pyramiding, and you could scale your positions in. Even if it's an A+ setup, right? You could pyramid into that setup. Like you could go 5 contracts in the beginning, right? Initial entry. And then if the trade idea is going the way you had it going, and like it's respecting all the PD arrays towards your target, you could add positions as the trade goes down. You know what I mean? So like halfway through, as it's going to your target, you could add a position in when it respects or disrespects certain PD arrays, or however you plan your trade. But yeah, that's a good way to manage risk too, because once you pyramid into a position, your risk to reward essentially gets bigger. So like your risk gets smaller, but your reward gets bigger. Before all of this though, you should have a max daily loss limit, and have your broker in the settings lock you out after, you know, whatever your limit is, because that way you literally can't trade anymore after you lost your max daily limit. Yeah, it sucks when you do hit that max daily loss limit, but it's better in the long run, trust me, because there's always gonna be another trade. Some of you guys just trade like this trade is gonna work or I'm gonna blow my account. And I'm only saying this because I was there before too, you know. And I'm not gonna lie, I'm like, this is my 3rd year trading. I'm not saying I'm the best. I just been through everything already, and I think I could speak for, you know, all the new traders out there. It is difficult as shit to stop trading. So yeah, just having that max loss limit is very helpful to managing your risk. So all in all, if you're out here going full size on every trade, not adjusting to the price action and how the markets are going, then you are just setting yourself up for failure, right? So what I recommend overall is just cut your size when the markets aren't doing well, up your size when the market is clean, clear, and your edge is like definitely there and it's an A+ setup, then up your size. Preserve your capital and keep your psychology straight. And if you do all of these, you'll make it in this game. So if this helped you guys in any way, drop a like, subscribe, comment down below, and let me know how you guys manage your risk in the markets. I'm here to show you guys real trading, no flashy numbers, but a consistent process and a way you could last and maintain and strive in this game. But yep, that's it for this video, and I'll catch you on the next one. Peace.